Good morning, John. We're back for the view in another week after Trump announced his Liberation Day. We've just a week ago when you met with Paul, and Paul interviewed on after Liberation Day. And we sit a week later, and Trump has now reduced the tariffs for another 90 days. It looks like we've had a lot of volatility in the last week. We've got a lot of changes overnight and a lot of interesting things to discuss today. And maybe I should start with John. What do you think of the current situation that we're in today?
Well, it's hard to read, but we have to make some assumptions based on observations. And at about 3 o'clock in the morning last night or early this morning, Australian time, there was a pivot by Trump. About the same time, or shortly before, the American bond market was weakening quite rapidly with wild rumours. There was also a view that there could be a bond market strike against the American administration, i.e. the American bond owners would not accept the strategy of increasing tariffs leading into a much higher inflation rate with an uncertain future regarding the budget and trade and the currency.
I saw the US bond, the 10-year bond yield got very close to or just touched 4.5% after being 3.8% on Liberation Day. So it's quite a move in the last week.
And I think pressure point was reached in the bond market. The equity market, the administration seemed to be less concerned with the stock market going down 10 or 20%. However, the whole strategy is to get the interest rates down in America. Now, how they do that, I think one aspect was get the oil price down, and we saw it's come back about to $60 a barrel, give or take. That's a net positive for inflation in America, but the tariffs and the inflationary effects, the immediate inflationary effects, are quite large. There seems to be an issue developing regarding the interest rates, the bond yields in America. I maintain, I've said this in presentations for at least a decade, that the bond market was almost driven by drugs, which was quantitative easing, and you could not take any notice of what bond markets were doing in terms of their predictive power. And that became a significant change in the world macroeconomic analysis. As quantitative easing has eased off, bond markets have sprung to life. The extent of that life I can't comment on because I still think central banks are lurking, are in the markets. They're not out. Right. But I think we're going to hit a point, Garth, and we probably need to explore this as the months go through. And the 90-day issue is quite important because I see a fight between Trump and the Federal Reserve coming. Everything he's trying to do needs the support of the Federal Reserve. And I just say to viewers, if they think that's a strange thing to say or wrong, just reflect on what's happened in Japan over the last 25 years. The growth in debt in Japan towards 250% gross debt to GDP, that's gross government debt, has occurred with substantial printing of money. And it also occurred because the Japanese virtually crowded out foreign creditors. The ownership of Japanese bonds by non-Japanese residents is minute. And so the manipulation of the bond market, the bond yield, the cost of debt to the government was under control. I believe that part of Trump's strategy is to move America to a similar macroeconomic setting. At this stage, he does not have the support of the Federal Reserve. That leads me to believe there's going to be an almighty fight. And probably the best thing he could have done last night is delay for 90 days, okay? Right. While he has that fight, because he hasn't got that covered. And I think he's probably got the message last night from the bond market, you don't have the support of the Federal Reserve, because he's going to need that greatly.
Yeah, they got away. They fed the 10-year auction last night. I think they got away that 39 billion quite comfortably. But I think he needed to do the 90 days just to get it away. So yeah, there's more trouble coming. Yeah,
there's more trouble. And let's look at the numbers, Garth. There's $32 trillion of US dollar debt. In my publications and in my budget presentations in Adelaide, which you can see on the internet, and please do, I point out if you look at the American budget, the current interest cost of the American government debt is 2.5%. It's not 4. The market's 4, their cost is 2.5. It's all historical debt. That debt is not going to be repaid. It's going to be rolled. When you mark that debt to market and put the interest rates through, we're talking about a $500 billion interest bill coming through as Trump and the administration works on reducing the fiscal deficit, rising or raising tariffs. It's going out the back door an interest bill, unless he can control the bond market.
Right.
And here the dilemma lies. Now, there's got to be a lot of thought around this. What does this mean looking out? But I cannot come away from any other conclusion that the Trump strategy is to unleash a massive quantitative easing program at some point in the future by direction of his administration over the Federal Reserve, which means either the Federal Reserve relents or he moves them. And I think you'll start seeing that being spoken about quite often in coming weeks.
Right. I see that. I mean, that bond market is much bigger than the equity market, and we've seen those yields, with anticipation of those yields coming down, they've all gone higher.
Yeah.
And a lot of that, of course, is with these bun fight with China. And I mean, whether we believe it or not, it feels like China and some of the global markets are saying there's less reason to hold American debt. So they've been liquidating, and that's pushed the yields higher, not lower.
Yeah, well, China was a big holder as a percentage of American debt going back 10 years ago, when the manufacturing of China and the profits being made were reinvested back in the American economy by Chinese administration, supporting the bond market. It was like a round robin, so to speak. And they wanted to support interest rates in America to keep the American consumer consuming as China built its manufacturing base. I've been on the record saying that. Yeah. 10 years on, we have a new administration going, hold on, this on a whole lot of aspects is unfair to us.
Yes.
As I've said before, well, it might be unfair, but it's not suddenly unfair. It's being unfair for a decade or so. And the government of America and the corporate sector of America has been quite happy for China to take the role of manufacturer to America, thereby keep the inflation rate down and close their eyes to the effect on the trade deficit. And meanwhile, have a fiscal budget getting out of control with no management of it. So there's a lot of blame here. China has some blame. America has a lot of blame. And rectifying this is not going to happen in a day. It's not going to happen in a week. Not going to happen in 90 days. And now we've got down to the real issue, which is America versus China. That's the real issue. And Australia sits in a very difficult situation because we do 35% of our trade with China, less than 5% with America. America is threatening that those who engage with China will not be regarded highly and could be targeted. What's Australia do in that situation? If we don't engage with China, is America going to pick up the 30% slack in our trade? Is that the offer?
No, exactly.
It's not the offer.
Yeah.
So we've got a real problem, and the government's got to work out what our alignment is and what our strategy is. And, it's a difficult one, but it has to be bipartisan. It has to be a national decision, not left to individuals talking heads in an election campaign. I suspect there's a lot of covert discussions going to take place with China. And
the Chinese just opened that up this morning as well in an approach to Australia.
They did. And, they're trying to build up support in Asia. Australia, better look at the map. We're in Asia. And we have 3 billion people to our north. And I said this weeks ago, we better start engaging with the 3 billion to our north rather than the 330 to our east. And if the 330 million to our east aren't going to be friendly, and the biggest risk I see is this discussion around pharmaceuticals. If they interfere with our pharmaceutical and the cost of medical care in Australia and dictate to us what we should be selling drugs as, because we have a strongly supportive medical industry and policy to help people afford drugs when they need those drugs. If America thinks it's going to dictate to us, then that, to me, you talk about trade war, that is a direct attack on our social system. And that should be non-negotiable. Now, And we should say it's non-negotiable and get America's response, because if their response is no, we're going to force it through, then we know who our ally is and who our ally isn't.
Yeah, makes sense, John. It really does make sense. John, if I turn to the equity markets, we've had some huge volatility. I mean, since Liberation Day, we've lost nearly 16 to 17% in the US markets, and recovered in 2 hours last night after Trump's discussion with the 90-day reprieve. We literally recovered more than half of it. The Dow was up nearly 9%, or we jumped from top to bottom with 3,500 points. We haven't seen that since 2000, to the GFC, to 2008. And the Nasdaq, I think it's the third biggest jump it's ever had, with 18% up in a day initially, and then some of the stocks. I think more than 150 stocks jumped more than 20%, which is a huge jump. All the large caps. We haven't seen this sort of volatility for a long time. Where do you think these markets will go from here? What is your view on the market here? How do we use that?
Well, I think that was a short covering rally.
Yep.
The extent of the rally and the quickness of it, it created a vacuum effect. So 1 minute the price is 80 cents, and the next minute it's 90. And those who are fiddling in the market on the short side are completely toasted. Those who want their balance sheets to look better by moving stock prices up get aggressively pushing. So it really depends on how quickly the shorts can cover and reset, I think, it's in a market sense. Nothing's changed in terms of the uncertainty of the outlook. Literally a 90-day decision, Garth, is kicking the can down the road.
Yeah, I see the VIX dropped from 50. It jumped 36%. It went from 50 down to 33, which is still on the risky side of it. The market's still uncertain.
The liquidity in the market is intense. I looked at gold last night. Gold rallied 3%, which
$100 exactly.
Huge I picked up on the wires, and I checked it. Australia's trading with America. We actually had a couple of surplus months already this year. So we have an annual deficit, Garth. We've had a surplus, and that surplus is caused by immense buying by Americans of Australian gold. So we are shipping gold to America, and that's occurred prior to Trump's announcement. So there might have been some insiders there, but there is gold hoarding going on in America, and makes me think about the confidence level in the US dollar. We are going to reach an inflection point at some point. Yep. If QE comes back, as I said earlier, then that's a real challenge to the value of the American dollar. If they start flooding the world with American dollars to refinance their debt.
I saw the Aussie dollar got down to nearly 59 cents, and we bounced back to 60.5, nearly 5% up again.
Yeah, but we've got to be realistic. It was 63 a month ago, so it's in the middle of the trading range between 59 and 63, and no one has a clue.
It just shows you risk on, risk off in a one-day volatility. Yeah.
We've got the issue: do we get China's support, or do we give up on China's support and go our own way? I don't know. If we don't go with China, I don't quite know where we're going to go, because I don't see America really putting out a helping hand. Are they going to buy our iron ore? I have never heard that. We want to give them our metals, our rare metals. That's a great strategy. Give it to them to buy some time. I mean, we've really got to get some strong leadership here. And yes, we can't stand up and get slaughtered, but we can certainly play more sensible games in negotiation. But as I said, what we're seeing publicly and what's going on covertly might be miles apart. But I will say this about America. There's something called sovereign risk. And when you price a bond, which is the sovereign debt, you think about sovereign risk, you think about credit, you think about inflation, you think about the currency. But sovereign risk is one of those difficult things to value. But what Trump has done in the last month is throw out all the rules of engagement which govern the World Trade Order. So everything you thought applied no longer applies. Now, in trade, that's a negotiation. But if he moves into capital markets and starts breaking rules on capital markets, freezing capital, if he says to China, you can't get your money out of it, I'm going to freeze it, anyone related to China, he's going to embargo their capital. Now, these are wild statements, but this is a wild time, and I think there's a real question mark over the credibility of America at present. Trump is playing a big game, but in doing so, he's exposed to the world everything that we've been saying on this view for the last 2 or 3 years, Garth. We've been saying the American debt situation is unsustainable. Now, debt situations are sustainable if no one cares. What Trump has done has made everyone care about America's debt situation. So he's actually exposed his weakest negotiating point. He's exposed. He's got $32 trillion of debt. China doesn't. He's got a trade deficit. China doesn't. He's got an election to fight, a midterm election. China doesn't. For him to say he's in some strong position, I just don't think he is. And I think he's played way too many cards, and he's realised last night, oh, crikey, I'm a bit exposed here. I better pull back and give myself some breathing space. What if the rest of the world, everyone's happy to talk to America? That's to say that 70 countries want to approach him. Of course they do. They approach them all the time. That's nonsense, okay? However, if the general view, and I think Australia's view should be, well, before we start, doing what Donald Trump wants, and I'm not going to use the appalling language he said the other night, before we go there, let's see how he works out with China, because if China can do a strong deal, then you come in behind that deal. If China can't do a deal, then we're all at risk and we have to rethink our strategy. So I guess what you're saying, and I'm agreeing with Garth, we're nowhere near the end of this.
Absolutely.
And this 90-day just extends the pain,
So in that space, you've got to readjust your portfolios or readjust your thoughts, because you've got 90 days to react to where we're going to be, but no one knows where we're going to be in 90 days because a lot can happen over that period.
Yeah, but Garth, he said 90 days. He could say tonight it's 30 days. I mean, this is like playing
so
soccer.
True.
It's like a soccer game without a referee. I mean, you
can't
have.
He's the marketer.
You can't trust anything he says.
Yeah.
And the more he does this, then the credibility of the American government gets devalued substantially. And you can talk about Trump, but there's a whole parliament behind him. There's an administration of the parliament. Now, we've got the administration under control, the cabinet, but there's a parliament sitting there, Republicans and Democrats. And there's a middle ground between them. I can tell you, they cross the floor. And the longer this goes on, and the more closer we get to the midterms, so 90 days takes 90 days out of the 18 months to the midterm. Now he's going to cut it down to 15 months. 90 days cuts down the 6 months to Jerome Powell was supposed to retire. He's cut it down again. So he's putting time limits in, which I don't think make any sense at all. Yeah, what he should have done is said, I intend to do this with tariffs, but I'm happy to talk to everyone around the world and negotiate. What he did, he threatened the world at midnight and then backed off. If he thinks that's a clever tactic, and that he's claiming it is, and I can understand why, because it makes him look clever, but I think the dark side is he overstepped. He was warned. He's probably getting warnings from the parliament, He can't,
especially in the bond market.
Correct. Bond market, parliament, central bank, China, and the rest of the world, particularly Europe. You can't railroad the world. So we've just got to watch this space. I'd regard the market as a relief rally, a reset, and then it sits there and it'll go up and down based on breakthroughs or pushbacks. So
we're sure you're living with a lot of extra volatility, John. I mean, this volatility we see, these wild swings that we're seeing because of on the policies that he's trying to impose.
And I think I think we've got to be active. And we've had our this morning, and I know you're talking to clients. If you get good investments and good high yielding investments, you hold them, okay? But if markets gyrate, even in the credit and debt markets, well, and if you're given a free profit, take it. If something's sold down and it logically is a time to buy it, okay? But volatility is your friend if you play with the volatility. It's quite painful if you sit there and watch it. So I think we all have to adjust to the volatility. which makes it very difficult because you don't want to be responding to volatility, so to speak. You want to say we're in a volatile market and anticipate swings and roundabouts. So maybe when things go up quickly, you can assume it's not going to sustain itself, and when things go down, you probably think there's going to be relief. And I think the last few weeks have shown that quite. There is a guiding hand, and let's be prepared for the interruption of the markets by central banks. Australia's already talking about an interest rate cut. Yesterday, Garth, that was an absolute certainty. Today, it's not so certain. what a difference 24 hours makes.
It makes a huge difference, and we're seeing that now. The risk back on the markets have picked up. In 2 hours, they've picked up literally more than 10% across the globe, and will be up 6% this morning accordingly. But I've also noticed that all the commodities have bounced up. Your oil price is back at $65. Gold went up $100. Silver, all the metals are up, and of course the emerging market currencies that were under pressure because people were getting out of them, they're picking up again. Yeah. So that's what 24 hours can do.
And the other thing, and this won't happen, Garth, but I've been banging the table, and I think there's a few politicians in Australia who the lights have come on about the opportunity to tax speculation and to tax, the frantic movement of money. The volatility and the extent of trading and the activities of hedge funds and the brain dead trading, there should be a duty on that. We used to have stamp duties. I'm sure you had it in South Africa. We had it in Australia. And it's the easiest thing to collect. And, there's mindless trading going for the stock market. The ASX is not governing the market properly in terms of allowing minute trades to move markets and manipulate indices. It's got to be addressed, and the easiest way to address it is to tax transactions which are mindless. You can tax all transactions, and at the end of the year, you can rebate the tax to those who are genuine investors, and those who think it's great just to intraday trade and move markets up and down and use algorithms and use AI and use front-running computers. You've seen it last night in America. How much could the American government have collected in duty if it was collecting a fee on every trade that went through the American stock market last night?
It would have done very well.
It would make tariffs irrelevant. Anyway, I'll just leave that point. And if the whole world did it, the whole world showed, said, why don't we all bring a worldwide tax on the movement of the speculative movement of money? Yes, it might drive up Bitcoin, but eventually those people get very lonely being in that market. There is a way to balance the budgets of the world. Taxing people who work, that is not one of them.
No, I got it. John, we're in very volatile times. We're very, very busy here. But a closing point that you could make to our shareholders before next week, because we'll be back next week.
Yeah, look, we are going to have another session next week with clients, but but of course, 4 days is a long time. So who knows what's going to happen on the weekend. I think Trump's played his card. It's now purely, as I said earlier, US versus China. It's the grand final. So we came to the grand final pretty quick. It wasn't a drawn out exercise. Yeah. And I don't care who goes to the White House and tries to do a deal. There's only one deal that matters, and that's the China deal. Yeah. And I think he's got a pretty difficult negotiation. And the longer he leaves it before he meets the Premier of China, he's not going to be very clever, because if he whacks those tariffs on, which apparently are going through, my estimate is circa, a tariff impost of 200 or 300 billion over a year, circa 30, 40, 50 billion a month, right? At when it lands in America, the importer pays it. The manufacturer or the component manufacturer pays it on the spot. Yep. So that's an issue, and I think that's what's cut it back to China. It doesn't appear he's hit Vietnam or Cambodia, which is a bit of a cop-out when you think about it. So that's interesting. And so Nike and Walmart have recovered somewhat. It's very much a target to China. And by targeting China, he makes it a smaller target, but a more difficult target. If he has to go after Cambodia and Vietnam and Thailand, and if he does that, well, then he'll get the ire of the whole world up, because they're emerging countries and economies. They need our support. They don't need to be, bulldozed.
No. Well, anyway. That, John, thank you very much, and always good to talk to you in the View in the morning. I know people see your view and take it forward. Thank you so much.
Thanks. See ya.